Hi, this is Dan Collins from the Dan Collins Report, coming to you for Traders Exclusive. Today I want to talk to you again about a little bit about managed futures. Managed futures has had a rough patch the last couple of years, and a lot of people are avoiding it, which I would say is a huge mistake. I looked at the CTA index for 2013, the Barclays CTA index, and it's down 0.6%. This is coming off of 2 negative years, the first back-to-back negative years in the 30-year history of the Barclays CTA index. But you have to remember that CTAs aren't an asset class like mutual funds, long equities. There's a lot of variety in managed futures, and every year, even the bad years, there are people who do well. And every year, there are people who fall into the medium to long-term trend following camp that do well. But the important part about managed futures is that it's non-correlated to equities and all other investments, and tend to be negatively correlated to equities in bad markets. A lot of people think that a final shoe is going to drop in the economic crisis, and having an allocation to managed futures is very important for that. But more importantly, what I want to talk to you about is, when do you get into managed futures? Because I keep on hearing people say, you know, I want to do managed futures, but we're not getting any business because it's such a bad period now. Returns are poor. Well, these are many of them are trend following programs. Now, there's a variety in them, but the whole idea is it is better for you to get in after a bad period than after a good period. A really strong period may lead to, you know, a drawdown afterwards because they're following a trend. I spoke to a CTA from RAM who had the best 5-year performance of anyone finishing up in 2012. And unfortunately, a lot of people were standing back saying, you know, you did so well that you're probably due a drawdown. Well, they got a drawdown. Now it's time for people to invest money back into them. And that's the way you should look at managed futures as a whole. 2011 and 2012 as a whole were negative years, though there were many individual managers who had great returns. Clark Capital Management, which is now run by the O'Brien family, had a stellar year in most of its programs in 2012. That's key to the idea that there's a lot more diversification within the trend following space than people know. But in general, you don't want to wait till somebody has a good performance before you make an allocation. You make a decision that I need exposure to this asset class, and then you find the best managers. You can go to the Barclay Hedge website. You can go to, there's Autumn Gold. There's a number of databases that you can find them at. But in this very uncertain time, if you do not have a significant allocation of your portfolio in managed futures, you should. And the fact that it's gone through a difficult period in the last two and a half years is good. That is good if you're just getting in right now. So take a look at it. Make sure you have an allocation to managed futures. Don't be afraid of recent poor performance, because that's actually beneficial for someone who is just looking to get into to managed futures right now. This has been Dan Collins from the Dan Collins Report. Keep on looking at Dan Collins Report and at Traders Exclusive. Have a great day.